Hi guys, welcome back to my channel, The Wealthy Mindset. It's yours truly, Money Making Mitch. And as usual, guys, this is not financial advice. Please do your own due diligence and research. The drop you should be thanking the market for. Oh, yes, you heard that right. NEO stock is dropping, but you should be thanking the market for that. If you're watching NEO latest dip and wondering what's going on, here's the uncomfortable truth. Every long-term investor eventually learns. Yes, long-term investor. You see, excuse me, guys, I see people coming on the mark on the different platforms, whether it's X, and they're saying that they regret buying NEO, just like the last time when the stock was going down. Of course, when the stock rebounded back to $8 recently, you weren't seeing them. That's how you know that you're not dealing with people who actually own shares, but you're dealing with the animals we call shorts. They depend on this going down. They depend on companies going bankrupt to make money. I spoke about it many times. It's a demonic, disgusting culture. But anyway, it says the uncomfortable truth every long term investor eventually learns. This isn't about fundamentals. We all know neo fundamentals is getting better and better and better. It's about positioning. The esteemed market makers, institutions, and algorithmic funds didn't suddenly discover something wrong with NEO. No, no, no. They didn't wake up and decide the company wasn't worth owning. No, 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 no. What they did decide is that year end liquidity, tax loss harvesting, and portfolio balancing create the perfect environment to push volatility and accumulate shares quietly. Retail feels the drop, yes, because most retail investors don't have the patience or the foresight, like the great Warren Buffett, of in terms of years. Institutional desks feel the opportunity. That's the difference. And like clockwork, you will see in January, after books close and institutional windows reopen, that many of the same players who left the price sag are suddenly increasing their positions again. This is the game. You can't fight it, so the best strategy is simple. Don't fight the market games. Learn them and benefit from them. Learn the game, guys. Why NEO is in a stronger position than the chart shows. While the price bounces around like a yo-yo, the company itself continues executing, record-setting Q4 deliveries coming up, industry-leading 5th-gen battery swap stations with only 72 seconds per swap to be released in January, partnership expansion with CATL, better margins and the potential for a break-even or slightly profitable Q4. 7 models now in active volume production. Strong traction with Onvo and Firefly. Expanding the total addressable market, the market wants you to focus on the ticker. But the fundamentals are what determine where NEO ultimately ends up, not the ticker. The crooked part of the market and how you win anyway. The stock market isn't fair. It's not designed to be fair. Because if it was, everyone will become millionaires. But once you understand how institutions operate using tax harvesting, options pressure, liquidity requirements, and end of year reshuffling, you stop panicking at every dip and start recognizing patterns. You get out of the instant gratification welfare culture. Those who panic sell. They donate shares to people like me. Those who accumulate, they profit from patience. You don't beat the game by fighting it, my dear lads. You beat it by walking the same direction the smart money walks, but earlier. Bottom line, NEO's story hasn't changed, just the short-term price has. NEO is executing, demand is there, deliveries are rising, technology leadership is real, battery swap infrastructure is unmatched worldwide. The dip is artificial. The long-term value is not. January will tell you exactly who was buying this pullback. Yes, we'll find out in January. And it won't be retail. Oh no, it would not. It will be most of your hedge funds, pension funds, and asset management companies yet again. I hope you guys found this video yet again to be informational, inspirational, and motivational. So don't forget to hit that thumbs up and hype it. It takes a lot of time to do these videos and the editing. And if you haven't yet subscribed, you might want to think about doing so, because in this channel, we are waking up the middle class for the first time to get a major piece of the pie from the ground level up as to how the games are played on Wall Street. And like 50 said, we get rich or we die trying, guys.